Good afternoon, everyone. I'm Sheila from Global Finance and Technology Network. We organize fintech conferences like the Singapore FinTech Festival. So the digital assets landscape has evolved rapidly over the past decade. Initially dominated by cryptocurrencies like Bitcoin and Ethereum, the space has expanded to a diverse array of digital assets, including stablecoins and central bank digital currencies. This evolution reflects a broader shift towards decentralization, transparency, and innovation in finance and ownership. The space continues to evolve, driven by technology advancements, changing consumer behavior, and the ongoing quest for further financial inclusion. Without further ado, speakers, may I have each of you give a warm introduction of yourself?
Well, thank you. Hi, everybody. My name is Jeannie Lim. I am the Executive Director of Paxos and based in Singapore. Paxos traditionally has always been an issuer, and we have a few assets. One is USDP, mainly in the US, and then we also have USDL, which is regulated in Abu Dhabi. And we also issue PYUSD, which is a PayPal USD, and recently reached $1 billion market cap, which we're very proud of, ever since we launched a partnership with Solana. And most recently, we launched a new product, which is this week, and this is why we're all here. It's called the Global Dollar Network, or it listed as USDG, where we invite all of our partners to join us in the distributing USDG. So first partners such as Robinhood, Galaxy, Nuvei, and so on and so on. Additionally, we are also a blockchain and tokenization infrastructure. So I'm happy to chat after this, and thank you for inviting me.
Thank you. Good to be here as well. Robert MacDonald, Chief Legal and Compliance Officer at ByBit. I think most of you probably know ByBit as well as second largest crypto exchange. And yeah, with that, I'll pass on to Salim.
Hi, everyone. Thanks for being here on a Friday afternoon. Thanks for having me. So, as Salim Dhanani, CEO of Pave Bank, we are a bank, a commercial bank operating at the intersection of digital assets and traditional finance. Our thesis is that as the world goes on-chain, assets get tokenized, money gets tokenized, it will become composable, it will become programmable, and there will be a demand for a new type of bank, and when we aim to be that.
Oh, okay. Hey, happy Friday, everybody. I'm Tom Menner. I'm the Chief Technology Officer for a company called SBI Digital Markets based here in Singapore. SBI is not the State Bank of India, as I'm often asked. It is a major Japanese conglomerate out of Japan, focused on financial services, primarily banks, payment services, venture capital, capital markets, etc. Our little branch of that family is focused very specifically on digital assets. In particular, we do distribution of digital assets, again, to institutional capital markets, essentially bringing the sell side and the buy side together. Thank you.
Thank you, speakers. First question, let's discuss institutions or traditional banks increasingly transitioning into the digital assets world and how fintechs like yourselves support institutions to migrate from traditional finance products to digital assets.
I feel as though as the bank, I feel slightly obliged to start with that one. We're not a traditional bank though. So look, I think we have to split out how the space has evolved, right? We started off in very much on the speculative side, and every kind of wave has meant we've become more, there's been a maturation of the industry, we've become more institutionalized, and I think the same thing has happened with banks to a certain extent, right? We've gone from taking a posture on risk, I won't name names, but you've seen some of the older banks in the US, for example, that may or may not still be here, but there was a very strong posture on risk and giving access to the crypto space as opposed to fundamentally looking at the technology and seeing what they could do with it. The waves that have happened, we've seen more and more institutionalization. We've seen a lot more focus on how can we take the underlying technology and how can we solve real problems. I think we've seen the largest banks in the world, the largest banks across Asia, all play a massive role. We've seen regulators evolve in terms of the underlying, what would the enablers, which will be, what can banks do? What can banks not do? And we have to also consider one thing, right? Fundamentally, you don't see innovation necessarily happening with banks all the time. being the pioneers of where that takes place. Not to say that can't happen, and certainly we are trying to do that. But conceptually, we have to remember something, and that is that banks are, I would say, almost gatekeepers of economic sovereignty for countries, and crypto has challenged this for central banks massively. And so the question always comes down to, and there's a very interesting talk earlier this morning about this as well, which is like, what comes first? Banks innovating and capturing benefits for the market, or is it going to be the regulations that protect consumers? And I think banks have naturally been hindered with this. So to answer your question, like the institutionalization is coming. I think a new wave of banks are coming, and I think players like the ones, everyone around this on this panel are going to be the ones pushing this innovation forward as well.
Yeah, and I'll just add to that as well, because I spent 12 or 13 years in traditional banking before moving into crypto, and very much to kind of Salim's point, I don't see the banks as being leading the innovation. So they have the framework, they have the infrastructure to leverage on what is already there. So from my point now as an exchange, I'm building out a compliance function, legal compliance function, making so I understand I can roll that out in every part of the world. But actually coming from a previous global bank, they already have that infrastructure. They can just plug and play pretty much with what's there. They already have their risk appetite. They already have a pool of clients they can just plug in as well. So I think very much to kind of Salim's point, I would 100% agree that the innovation is probably being driven by probably everybody around this panel, everybody in this room, and then the banks are kind of using existing infrastructure to go with that as well.
So I think Paxos took a very different route from all the other issuers out there. I think Chad, our co-founder and CEO, decided that through his conversations with all the institutions and banks, the one thing that all the institutions care about is regulation and how compliant are we going to be? How are we protecting customer funds? Making sure that we have the right assets and liquidity, and which countries can we offer in? So this is also the reason why we decided to do regulation first, and not just being regulated, being prudentially regulated. Right? And this is the reason why DBS, like folks like DBS, is willing to bank us. And now we have many other banks. The first time in any crypto experience where banks are chasing after me this time. I'm like, well, I think this is going the right way, and I think this is what we have to do as an industry to ensure that banks, regulators, other financial institutions, and collaboration with other regulated entities is comfortable with this, what we're issuing and protecting the assets.
Just to add a final point from a capital market standpoint, we've had conversations with various banking entities, both here in Singapore and Japan and elsewhere. And there's two ways that we look at it. One is, of course, operational efficiencies. For example, if by virtue of a stable coin, for example, if I can get to T0 or T near zero payment for settlement, once I execute a trade on a digital exchange, that's fantastic. So that introduces operational efficiency. The other thing that the banks might look at, again, particularly from a capital market standpoint, is issuance of product. So for example, we've had, again, I had discussions with a Singapore bank who basically said, for example, if I create a digital bond or even a native bond and I tokenize that, there's not really any advantage to us to do that. The argument for, let's say, tokenization of a bond is fractionalization of that bond, so that we as panelists could buy a $1,000 token versus a $100 million bond. So from the institution standpoint, they said, we don't really care about that. That maybe serves our retail customers, but from a wholesale perspective, not so much. However, if by virtue of this technology you can open new distribution channels for me and actually get me to new marketplaces or come up with new innovative products that would be of interest both to my retail or my institutional clients, now I'm interested in that. So from the banking perspective, again, there's the notion of the operational efficiency, but they're at least, I think, taking an eye and looking at, is there a possibility of issuance of new assets and asset classes, and also new distribution channels that we can make use of?
Those are very interesting points. And I think institutions are increasingly embracing digital assets in several key ways, such as partnering fintechs like yourselves to develop and offer products and services. My next question would be about real-world asset tokenization. It's one of the largest market opportunities in the blockchain industry. It's worth projected to reach 30.1 trillion by 2034, according to a Standard Chartered report. A wide variety of assets, including cash, commodities, real assets, could potentially be tokenized. As we have a stablecoin issuer, a crypto exchange, a digital bank, as well as a digital asset distributor and broker in this panel, what roles do different types of organization play in this? Let's hear from each perspective. Maybe Robert, you want to start first?
Yeah, I'll start. I thought we were going to go in the order of the issuer, then the exchange. And, so from an exchange perspective, I think we play a sort of really vital role. So at ByBit, we always see ourselves as kind of the gateway into that, or kind of providing the infrastructure. So from an exchange avenue, we also provide that venue for people to kind of buy, trade, sell, also price discovery, and also that kind of mass adoption or mass use as well, in terms of being able to use this better trade out, and as, I think, as we said earlier, increase kind of that liquidity pool as well. I think, but collectively, it's not just each of us sort of stand alone, doing it in isolation. I think probably one of the points that will come across from all of us is it is a collective effort to make that happen as well. So from the issuer to the bank and so on as well. So yeah, it'd be interesting to hear who wants to go next, Salim or Jeannie.
Yeah, look, real world RWA tokenization is massive. Like, it's like everything and everything, anything and everything, right? We look at it in a few different ways. I think there's different layers of value. The one that we discussed, and we've discussed the most over the last, I'd say, 18 to 24 months, has been, I can move money around the world really simply and easily. And I think that, every crypto pundit has talked about the fact that this is an era of stable coins in RWA. I think we're going to go through, there's a few more, like was it, layers in this onion, right? It comes down to the tech, and it comes to programmability and composability. And we really haven't seen real use cases of the value of this. It's really on the infrastructure level that we're still having these conversations right now. And this is where I think the real value will come. And I think this is where it will change financial services, right? And if I excuse me for being a bit esoteric on a Friday evening, right? But let's just talk about what is the purpose of a lot of financial institutions. And we are managing counterparty risk every day. This is what we're doing. And with tokenization and blockchain, we are allowing the codification of counterparty risk in many ways, making it more transparent and making it manageable. And when we bring this to RWA, or any kind of asset that's being tokenized, ultimately we're going to see new products, new services being built on top of, whether it's money or bonds or stocks or options, whether that can be distributed to more people because of of cost or rules around AML and compliance. All of these things are going to be automated, and they're going to be more hyper customized because the underlying cost and operational efficiency will be increased. So the way we look at it as a bank, specifically, just to take it back to the question, is that we view ourselves as a part. I don't think that a bank's role in the future is going to be to make every product for every segment of every corporate. We're a corporate bank. I think what's going to happen is that we'll be like almost like the Apple, ideally, like in terms of conceptually, in terms of where we sit in the value chain. We own our corporate customer, we own our business customer, but ultimately some of the products and services that are going to be built by third parties. And it's going to be things like the unified ledger, like the Finternet and Global Layer 1, which will unify these app developers across multiple different banks and financial institutions along the different markets. So that's kind of how we see the world. We are looking at multiple different avenues and in tokenization, especially with money and stable coins and corporate treasury, but I'll go save that for the next year when it's live.
So from a distribution standpoint, Salim makes a good point that I think the value of the tokens is really going to be twofold. One is starting with that network effect. That is, it's one thing for me to, let's say, list the token for sale on Robert's exchange, and then Jeannie buys that token. But if it just sits in her wallet, ideally accruing some value or accruing some interest, that's one thing. If, on the other hand, she can take that token and now use it for some other purpose, whether it's a secondary market, whether it's collateralization, whether it's liquidity pooling, that actually, that kind of general liquidity and movement of that token actually is what's going to provide that value over and above traditional financial market infrastructures, I would argue. But there's a caveat to that. The second point to that is there actually has to be a buy side for that token. So in terms of tokenizing real-world assets, there's been quite a bit of enthusiasm about doing that. But what we've also seen is there isn't necessarily a market for those tokens. Who has the risk appetite for, let's say, a tokenized gold or tokenized real estate, and those are some of the common ones, tokenized commodities, or anything that you can think of that would be tokenized. Is there really a buy-side market for that? It might be the case that, for example, Robert and his exchange caters to a very specific segment of buy-side. And so maybe the asset that I am providing to his marketplace really has to suit his customer base. And we'll talk, I think, in the next question about some of the challenges around RWA. So there's some comments I want to make there. But again, one of the key things that we emphasize and that we see is that having that buy side that's available to whatever assets I'm creating or assets that I'm issuing.
So from Paxos' point of view is what we're trying to do is to solve problems. And I think one of the key problems in this world that traditional finance couldn't really solve for is access, global access to people to be able to move money around the world, no matter where you are, whether you have a bank account or you don't have a bank account, whether you have an ID, you don't have an ID. But what everybody has in those emerging markets are a mobile phone. So I think Paxos is very passionate about building products for different kind of segments of consumers and institutions, right? In order to create this global access for everybody to move money in that way safely, cheaper, and that the ones that don't have any access to a financial instrument today.
Sure. What are the real opportunities or challenges to increase adoption of real-world asset tokenization? Feel free to include use cases or projects that you or your company have worked on.
I'll go ahead and take a quick swing at that. As I mentioned, having the buy side for us is very key, and I think that's going to be key for anyone doing RWA. The other thing that you have to be concerned about is, again, I had argued, and as Salim pointed out, the value is going to be in that liquidity, that movement. But the moment I cross jurisdictional boundaries, that suddenly becomes a bit of an issue because the recognition of those assets and how they're treated is different in any given jurisdiction. So from a broker-dealer distribution standpoint, I want to be able to say, okay, Salim, you're issuing this digital bond, it's tokenized, what have you. I'm going to list it on Robert's exchange, but oh, by the way, I'm going to list it on exchange in Japan, exchange in Thailand, exchange in Switzerland. That's providing quite a bit of liquidity. It's having those distribution channels, which provide some value to the issuer. But I also have to account for those different jurisdictions. And depending where we've issued that asset, depending where the asset is bought, there are different ways of approaching it. For example, Switzerland will recognize that if you own the token, you own the underlying asset. Singapore does not recognize that, at least not today. So these are kind of the factors you have to think about. And it is, from a regulatory standpoint, it does inhibit, it makes it harder to actually do the adoption.
So I was going to say exactly, just build on that, exactly the same as well. I mean, one of the positives is that it's exactly the liquidity point, fractional ownership, which I think you touched upon earlier, and equally on the flip side of the challenge, exactly as just touched upon, what does that mean from a legal regulatory perspective? And I think from my angle, from an exchange where we have a number of licensed entities around the world, to your point, it could vary in all those. Actually, and if people are using that token as well, where does it go? Where does it mean when it lands there? So for me, I think the biggest challenge at the moment, aside from the other ones I think we've touched upon in other panels around kind of security, data protection and so on, is actually regulatory clarity. What does that mean for real world use as well?
Agree with both of your points, but I want to emphasize something. I feel like the biggest gap right now, the convergence between Tradfi and DeFi, is the education, is bringing people coming in together to discuss real life topics, and not using jargons. So if you go to a SmartCon or a DevCon in Bangkok next week, you're going to hear some very, very crypto bros jargon that TradFis will go, I have no idea what he or she's talking about. So I think as part of my role and Paxos is converging, because we work with banks, we work with crypto bros, we work with exchanges, we work with everyone in the ecosystem to kind of translate that language a little bit. And I think this is part of the reason why we built the GDN, the Global Dollar Network, to bring everyone in together to collaborate. And then we are in the middle, just being the moderator and the translator between both worlds.
I'd just couple of things on this. So like, firstly, yeah, sure. Like, the challenge is going to be interoperability. I totally agree with that, right? But like, I think we're making waves towards this, and I think fundamentally, it's like, guys, people don't care outside of SFF about tokenization, like conferences in our space, right? Like, they just don't care, right? So it's going to be like, and maybe they care about Bitcoin, but they don't care about a tokenized bond. They're just like, what the hell are you talking about, right? And I think we need to translate this into value, and I think it will take time. It's not going to happen overnight. And I think exactly what you're saying about buy side. There was a really interesting conversation on the institutional side that we were having, and saying like, well, if I tokenize it, what happens to liquidity? And what's going to happen? And it's going to lock out pools. It's going to create more liquidity pools. And we've already seen what happens. I mean, just pick any emerging market currency, and you can see the impact of like localized liquidity pools. And so I reckon what will happen is that we'll see players, be it banks, be it clearers, whoever they are, that you'll start to see them being able to move between the two sides of the coin, be it on-chain or off-chain, and cater to different markets. And I think that's kind of what you're saying, Tom, as well. The opportunity here, okay, compliance-wise and regulatory-wise, we are not doing a good job in compliance as an industry, like, not in crypto. I'm talking about the whole financial sector, right? And I will especially point to the GSIBs on this, right? And if you think about it, the last 10 years, the largest banks in the world have been fined about $40 billion for money laundering and compliance issues, right? So that's your opportunity from a compliance perspective, from a regulatory standpoint. The opportunity is let's be better at compliance and money and moving stuff around. And this is the opportunity. And this is where programmable compliance comes in. This is where composable money comes in. If we move $1 between everyone in this room, no one knows where it began, no one knows where it ended, no one knows anything about you by the time it gets to the last person. With a stable coin, a Paxos dollar, for example, you know every single person that's touched this digital dollar. That is the opportunity. And I think that's the opportunity from an education standpoint, from a regulatory standpoint, from a business standpoint, and frankly, this will solve a lot of the problems that we see systemically in friction in the financial sector.
Agree, and I think it promotes more transparency as well, because we see every person in the ecosystem, and when audit comes in for like money laundering investigations cases, it's a blockchain. It's very transparent.
I was going to say exactly that. I spend a lot of my time with regulators, and they always ask me about transaction monitoring, how we know whether funds have passed through, how confident we are, where the risks are. And going back to kind of my old Tradfi sort of fiat days, you only knew kind of one step before that, one step after you. Now you could have it thousands, hundreds, tens of thousands of hops if you wanted to. So that transparency piece is a really big piece as well.
It's going to worry the privacy guys, but yes, it's true.
I just wanted to elaborate on the point that Robert made about fractionalization, fractional ownership of assets. I'm wondering it could reshape like traditional investment approaches, but what does it mean for investors?
Yeah, I just build on. I mean, maybe you could add on to that as well. But I think for investors, it's a great opportunity, because actually, if you're investing in something, say like gold, for instance, in the past you could only buy a whole gold bar, but actually if it's tokenized, you can actually have a fraction of it as well. So it just gives you I think it just opens up the opportunity to, rather than institutional investors or large scale, now it opens up to everybody else. So you start to have mass adoption as well.
And Paxos, we actually issue PaxG, and the whole team is here. It's digitalized gold. And a lot of people think, oh, it's probably scam, because there were a lot of gold scams back in the days. Let's just be honest here. But a colleague of mine, Guillaume, recently posted on LinkedIn, which is, I thought it was the coolest post. He literally went to the vault. So every bit of digital gold that's being bought on the exchanges, literally there is a security code on those gold bars, basically saying that that is your code, that is your gold, but just broken down into different pieces. So he went to the vault and literally held the whole bar and gold and said, this is the gold that I bought on the exchange, on Kraken, crypto.com, and other, hopefully one day ByBit. But I think this is a pretty cool kind of use case where, again, I'm talking about accessibility. We may have access to buy physical gold today, but there's tons and tons of other people. The next billion people in Nigeria, Indonesia, Vietnam may not have access to any of these commodities or investment products like we do.
So I think in addition to the inclusiveness of the investment as a possibility, another way to look at the fractionalization, I think, well, two ways. One is the introduction of entirely new asset classes. Like, for example, it may sound a little bit silly, but for example, tokenizing a revenue stream so that I know this building is going to generate this kind of rental income. Or an example that actually we are working on is a movie production where once the filming ends, there's a lot of post-production and marketing that goes on before the movie is released. That is debt that's being carried on the books of that producer. If you would tokenize that as an investment, the future gains of that movie once it's released, Tom Cruise blockbuster, me as an investor can actually buy an investment into that movie, and I get, as a producer, I get to take some of that debt off my books. That is a completely new and novel investment class, so that I can present that to investors or to bank customers or Paxos customers, for example. On top of that, if you look at it from a wealth management perspective, it's not quite the fractionalization, although that's part of the puzzle. But the granularity of those investments is such that, for example, I could use a ChatGPT interface and say, okay, here's my risk appetite, here's the yield that I'm looking for, maybe some other factors. Assemble a basket of tokens for me that represent this kind of yield curve and risk appetite that I'm presenting to you. And I can take these tokens, which may be fractionalized assets, may be completely new and different asset classes, and assemble this basket that represents some investor profile that I'm looking for. So I think that's potentially a very interesting avenue from, again, an investment strategy standpoint.
I like the emerging market point. I think that's the opportunity. I think that if we're sitting here and we can go on Robinhood and buy a bunch of shares and options and bonds, I don't think there's massive, I think there is value in the operational side, on the liquidity side, and there's probably second tier, third, after you peel the layers of the onions value. But just think, a lot of the world doesn't even have access to even half these products, not even a quarter. And that's the opportunity. And they're still working in dollars, they're still working in euros and hard G10 currencies. And yet they don't have access to these currencies. And I think that the cost structures for the financial system today don't work. And I think if you can start giving access to, even think of it so simply, emerging markets, they trade in G10. They don't have access to G10. They're holding G10 to hedge their risk. They're not buying sophisticated options. Their corporate treasury are just sitting idle, just completely idle. And I'll leave you with that thought.
Well, we just have slightly more than 1 minute left. What do you think this panel will be discussing in a year's time?
We can be celebrating the. Absolutely, I think for us in this industry, we've come a long way. We had crypto winter, but I think it's time to win. And again, for me, what winning means is to provide access to as many people as possible. Because I feel like when you solve real world problems, there will be a lot of demand, use cases, partners coming to us, and then I really want to collaborate with as many partners as possible in Africa, in Vietnam, and to the likes of the world that you don't even talk about, right, in today's world.
I don't know how I can follow that, but I was going to say, from my side perspective, a legal compliance perspective, I'm just hoping in the next year or so, globally, whether it be the US, whether it be Europe, whether it be Asia, Middle East, we just get kind of more clarity. In terms of not just crypto, but generally kind of like Web3, where we're going, DeFi, and actually how can we use that in our space as well?
A year from now, we're going to be discussing why it took us so bloody long to get here, to get on chain.
So I agree with Robert. I think the regulatory clarity will be very important. So ideally, we'll see that over the course of the year. I think the rest, for me, would be around the liquidity, the actual network effects. So that probably implies some level of interoperability amongst the infrastructure, multiple DLT networks that are out there. So my ability to get product onto Robert's exchange, as well as these two other exchanges, as well as this collateralization service, is really what's going to be key and what I'm hoping for by next year.
Thank you, speakers, for your valuable insights. Thank you.
Thank you.